This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with their livestock roundup. And it has kind of been a quiet afternoon as we wait for something to happen, but really not a lot of traders wanting to jump ahead and put new positions on ahead of tomorrow's cattle on feed report, which will be released after the close. Now, we've been keeping a close eye on the cash market. We've seen that subside quite a bit over the past couple of weeks, and that has put pressure on the board, but we are getting word that packers are raising their bids here throughout the Midwest today in Colorado and Nebraska, and hopefully get a little bit of higher cash to firm up out there. I think that would do wonders for the board. Right now, the June contract lingering near the low end of technical support 110. A break and close below there. Wouldn't be surprised to see additional long liquidation from the funds, but with that June time frame starting to run out, I think there's opportunity for the board to rally a little bit, especially, as I said earlier, if we get that cash to stabilize. 112.50 to 112.65 is a top end of resistance. If we can achieve consecutive closes out above here, I think we can see this market continue to work higher to close that basis with cash. Now, moving over to the feeder cattle market, this is something we've been less optimistic about as the chart continues to look very ugly, treading near uncharted territory. 140.5 to 141 is technical support. A break and close below here kind of puts us in no man's land. So again, we're kind of sitting on our hands waiting for the dust to settle in this market. I think there'll be a value play at some point, but want to see things firm up just a little bit more. If we can stabilize above 142 to wrap up the week, potentially we can get the market moving north again. Resistance comes in 145 to 146 until we get out above there. Look for that range, basically 140 to 145. Now, wrapping things up with the lean hog market. Lean hogs got some great news here earlier this morning. Export sales were phenomenal, with China stepping in as a big buyer yet again. Now, with that said, we saw a gap basically straight down on the open. So a softer trade open that has been rebounded a little bit, still kind of in the middle of no man's land. Technical support 85 to 86. This desperately needs to hold for the market to continue to kind of make higher lows and potentially higher highs. On the resistance side of things for that June contract, 93 to 94. If you are a longer term bull, probably going to want to look out to some of the deferred months so you don't have to worry about the roll. So that's what we're looking at to wrap up the week. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.